Welcome to today's analysis on gold, SPX, and US oil. Starting with gold, price has been in a short-term bearish pullback ever since it created a new all-time high around the $4,381 level. Similarly, on SPX, after forming a new all-time high at $6,912, we've also seen a short-term bearish correction taking shape. And when we look at US oil, price has generally been trending lower for quite some time, maintaining a consistent bearish structure. In this video, we're going to break down all three markets, gold, SPX, and US oil, and go over what these recent moves mean and what to expect in the coming sessions. Before we continue with the trade analysis, I just want to quickly mention that most of my trades are executed on Bluefin Exchange, which usually comes with a $3,000 funded balance for live trading. If you're new to Bluefin, it's a global crypto exchange offering over 600 perpetual pairs with deep liquidity. New users can also get up to $5,000 as a first deposit bonus, and there's a Bluefin Futures bonus program that lets you experience real futures trading using bonus funds without risking your own capital. So, if you want to test live trades safely, make sure to check out Bluefin Exchange. I'll leave the official sign-up link in the description. Now, let's get back to gold. Here on the daily chart timeframe, price has been making a short-term bearish pullback ever since the AQ Pro MACD indicator printed that signal where the classic line crossed below the signal line. Right after that cross, a red dot appeared, confirming the shift in momentum. Dropping down to the 2-hour chart timeframe, we can see that since around October, price has been moving within a clear range, with a resistance zone near the $4,019 price level and support around $3,928. Now, considering that gold has already been in this short-term correction for several weeks, the current range is likely setting up the next major move. If price begins to trade and close above $4,019, we could see a short-term bullish continuation. But I expect that move to be temporary because we still have a strong, unmitigated order block sitting around the $3,843 region. That zone has not yet been tested, and the market often revisits such areas before forming a sustainable bullish trend. So my expectation on gold is this. If price drops below $3,900 and makes a deeper bearish move into that order block, we could see a strong reaction and potential bounce from that zone before the next major bullish phase begins. Until then, any breakout above $4,019 is likely to be a fakeout, trapping early buyers before price falls back down to mitigate that lower order block. Moving on to SPX, on the daily chart, after price created a new all-time high around the $6,912 level, we started seeing a bearish correction forming. Recently, the market broke below a key level at $6,764, which I mentioned in the previous analysis as a crucial level to watch. If we move down to the 2-hour chart, price is currently trading below $6,752 and attempting to retest that broken level. If this retest holds and price fails to close above it, we could see a bearish rejection, leading to another drop toward the $6,550 support zone. However, if the market pushes back above $6,752 and holds, we may see a short-term recovery rally. For now, though, as long as price remains under that level, my short-term bias stays bearish, expecting a continuation towards $6,550 before a potential bounce. Now let's move over to US oil. On the daily chart, price has maintained a bearish market structure for most of this year. At the moment, oil continues to range between a resistance level at $66.42 per barrel and a support level at $55.145 per barrel. For any meaningful bullish shift to occur, oil must break and close above $66.42 to confirm a change in trend. Until that happens, the overall market bias stays bearish, and we could still see a break below $55.145 if downside pressure increases. However, my personal outlook for the coming weeks is that oil will likely remain inside this range, fluctuating between support and resistance. A confirmed breakout above $66.42 could open the door for a rally toward $80.73, but without that breakout, I expect oil to continue ranging through the rest of the year. Before we wrap up, a quick reminder. Most of my trades are executed on Blofin Exchange, which provides a $3,000 funded balance for live trading. Blofin is a global crypto exchange offering secure trading, deep liquidity, and over 600 perpetual pairs. New users can also receive up to $5,000 as a first deposit bonus and join the Blofin Futures Bonus Program, which allows you to trade using bonus funds without risking your own capital. If you want to practice or trade live safely, make sure to check out Blofin Exchange. The official sign-up link is in the description below.
Our Signals group is available only for our premium members. To become a premium member, all you need to do is purchase the AQ Pro indicator, which is now available for only $1. Once you make the purchase, you'll immediately get an invite to our premium group where we share all our live trade setups in real time. And the best part is, it even comes with a 3-day risk-free access. Thanks for watching, and I'll see you in the next video.